Hello, everybody. Welcome to the Thursday NFA live stream. We are back again, and I'm joined as ever by Ben from Into the Cryptoverse, who is right now trying to tweet things out.
And thanks for stalling me.
I tried, man. And then Guy, who is at the official Black Ops site over at Coin Bureau. Guy, good to see you.
Thanks, Rob. Yeah, just been interrogating a few people and got stuck late at the office. Yeah.
As well you should. A little waterboarding never hurt anybody. So anyhow, today we're talking about the 4-year versus the 5-year cycles. And we're going to take a look at also government shutdowns, because it looks like that's actually pretty good for the crypto market at large. And then we'll just take a look at what AI means and what's going on. So first things first, there has been quite a flurry of information coming out about this. And I want to bring this up because I keep getting asked this question, and I wanted to get other people, such as yourselves, to talk about this. It's the Bitcoin implied ISM pricing. And ISM, and this is, and I want you to notice something about this. Take a look at from 2022 to 2020, well, to right now. It's been pretty much below 50, which means that is kind of a not so optimistic market. Anything above 50 is optimism, anything below is not. If we expand that out, going back to 1948, we can take a look at the ISM, which is the Institute for Supply Management, or the Purchasing Manager Index. And this is what this is. This is a United States leading type indicator where they survey 300 manufacturing firms, just asking things like, how's everything going with the business? What's going on with your supply? What's going on with your stock? What's going on with sales? And they kind of just give like a gauge of what is happening as far as like the positive and the negative. Again, anything above 50 is like we're moving in the right direction for the country and for manufacturing. Anything below that is not so great. And this chart, as we're seeing here, is saying that Bitcoin is just following the ISM pricing. And it's all about a business cycle. And if it's just the business cycle, then of course we can take that, we can extrapolate that to the M2 money supply, United States and global. And then if we take it even further, this is the whole theory behind it. That's Raoul Pal. And he is the one that has brought this to everybody's attention. I keep getting this question. And he says it's not just the ISM, it's also piggybacks on the maturity distribution of marketable interest-bearing public debt. And he states that because this has moved from 4 years, this debt, which is coming to maturity, to now 5 years, that means we don't have a 4-year cycle, and it is a 5-year cycle. So everybody's jazzed up and hyped about that. And I will just say that I had to look that up because this is not my forte. And it states that reports in 2021 and 2022 suggest that the average maturity of marketable interest-bearing public debt was actually extended from 4 years to 5 years. And you can see here that's 34 and 35%, or roughly 70% is 5 years or less. And then I had to ask the question which is, okay, is this the first time this has ever happened in existence? Is this something new, or is it not? No, it's not. It has actually been extended to 5 years plus, sometimes 6 years. It happened in May 1990, December 2016, January 2000, July 64, and also sometime before 1980. So this is my question for you guys. Do you feel, or do you think that this is extending the cycle? And do you think that there's some bearing or some relevance to what has been said here? Or is it just another 4-year cycle? Or are we just screaming at the wind going super cycle? I will start with Ben first.
Yeah, I mean, I think that I think all market outcomes should be considered, because no one knows for sure what's going to happen.
True.
But it's hard to feel like it's not just a roundabout way of saying this time is different again. So yeah, I mean, in the 2017 cycle, Bitcoin topped in December. Altcoins didn't top until January of 2018. So like it's not like you can't have anything going up, but I do wonder if it's just kind of the beginning of people falling for the same thing again and again and again. And like last cycle, like it took me until February, I feel like, of 2022 to kind of admit that it was a bear market. And, I think this time I'd rather just go into it and assume that it's not different. And what I mean by that is, like, it means converting your altcoins back to Bitcoin, before you get into 2026, or at least no later than the second week of 2026. It means, potentially taking profits back to US dollars. And it also would mean holding, like, every cycle, no matter, even if I'm convinced it's a bear market, I still hold like 20 to 30% of my Bitcoin position, just in case I'm wrong about it being a bear market year. So I think that's what you could do. I think you could weight it based on the probability what's the probability of you think that it could be different. So, like, if you're 80% sure that next year is a bear market, then, you could sell 80% of your stack. And that leaves, say, like the 20% in case, Raoul Pal is right and it ends up extending. But I guess for me, I will go into this because so far everything's played out. I mean, we had the high in August, the low in September. Now we're in October. We're seeing Bitcoin rally. Like, it just seems like it's playing out like every post-halving year that we've seen. And normally what happens is then when we get into the midterm year, that's when the bear market hits. So I'm going to operate under the assumption, if it's not broke, don't fix it, and run with that. And you know what? If sometime next year it turns out that he's right, then I'll tip my hat to him. But it's not going to be my base case, I guess, going into 2026.
Yeah, I will agree. And then I will just say, like, before we get to Guy, I mean, even Bob Lucas chimes in and says this is a 5-year cycle, is like saying super cycle in prior times. So you know who Bob Lucas is, that's pretty much sums it up. Guy, what do you think here? And first of all, thank you for coming today. I know you just got done recording a bunch of videos and now you're here, because I know it's late over there in Dubai. So appreciate you coming in. But what do you think about this one? 4 years, 5 years? You just going to play it by year, or are you just going to say, I'll stick with a 4-year, or to play both?
Well, look, I mean, I try to keep an open mind about these things because, as Ben sort of alluded to, like, no one knows. We're sort of, all of us, kind of, for all our projections and for all our analysis, we're all kind of operating day to day, week to week, month to month, and we just don't know what is going to happen tomorrow, next week, next month, etc. So yeah, kind of going, along again with what Ben said, because we don't know that, we have to operate on past cycles, because that's how it's played out before. And if it is going to be different this time, then we'll only know when it does actually turn out to be different. And again, to back up what Ben was saying, this means that you just have to be careful with your risk management. It means, like, if you're holding out for an absolute whopper of 2026, then surely it would at least make some sense to take some profit off the table in 2025 in case you're wrong. Because, if you put all your eggs in one basket like that, that's, the upside is huge, but the downside is just as big. So yeah, and it, like Bob Lucas says, it does sound a lot like COPE, doesn't it? It's just like, well, it isn't really playing out how I sort of thought, or it looks like this time might be different. So maybe it's a 5-year cycle this time, rather than a 4-year cycle. It's like, well, maybe, but we don't know. So yeah, I'm skeptical of it, really, and I'm kind of, if it does turn out to be different, I will have to try and adapt in the moment. But I don't really see what else you can do. And yeah, it's absolutely right. It does reek of this time is different.
Yeah, and well said. Well said. You got to play both sides. It could happen. It could not happen. That's why you have to, as the kids say, lock in. You got to make sure that you're really focusing on what's going on and take a look at these indicators. And I will say, like, this is what I was talking about last weekend. I did this video called "Everybody's Wrong," and it just went over the last price predictions of 2020, 2021. Not a very popular video with some people that were in it, but I also actually put myself in there and told you how wrong my price predictions were, and they were a doozy. They were very wrong. But one of them, I took a look at Ben doing a video on Pi Cycle Top in April 2021 going, hey, this thing, it popped off right now. Maybe this is something to take some profits. And it was at 58,000. And people said, no, it can't be 58,000 because everybody's saying 100,000 at least. If you would have taken profits at 58K in Bitcoin, you could have actually waited till it dropped 50% to 29,000 back in June, July of 2021 and rode that back up again if you wanted to. And I just think like, if you're going to play the odds, this is like Guy said, this is all kind of playing out just like how it was in 4-year cycles. And if it's not, well, then I'll take my bags over to 2026, but I have to be aware. So that's a good way to say things. Let's move on to the next one, which is the government shutdown. I'm not going to get political because if you want to be political, just talk to the experts on X. There's no shortage of them. But I will say that it's been pretty good for the crypto market in general. Let me refresh this. Is Bitcoin almost 120,000? So Bitcoin's up, Ethereum's up, BNB, Solana, USDC. I just want to get everybody's opinion before we move on to the AI question of, do you think this could last for quite some time? Because sometimes it actually does. And is this actually good for the market? Or will it be like the last couple of times where it spiked and then we have like a big pullback? And then guys, since you were talking, hit up.
Yeah, we did a video on this recently. It's really interesting. It's really nice. There are two nice things. Firstly, that they coordinated this shutdown to begin right as October started. So I'm sure everyone in crypto appreciates that. And it's yet another bit of the on-running theater, the on-running soap opera that is US politics. I mean, it keeps all of us entertained. Like, just the idea that the government can shut down entirely is crazy to people in so many countries, not least the UK, where I'm from. But yeah, I mean, look, in a situation like this, the sad thing is that whilst all this is happening and whilst all our bags are going up, in the background, a whole load of federal workers, especially contractors, are getting completely shafted. People are being essentially told to work for free, or they're either being furloughed, sent home and basically, they'll receive their salary. They'll probably receive it late, but they'll still receive their salary. They won't have actually done any work because they'll be told not to do any work, but they'll still get paid for that work, albeit late. And then there's another whole group of people who don't have the choice, who have to go into work and won't get paid for it, or will, at the very best, be paid late. And the crazy thing is that, like, I think a lot of people assume that those people are, just not working terribly important jobs, or, there's this stigma or prejudice against, lower tier jobs or manual labor jobs or things like that. Like a lot of these people are people like air traffic controllers and the Secret Service and people like that, which is nuts that these people are being expected to, just government shutdown, so no pay for you this month, but we'll make it up to you. In the meantime, you've got to keep working because otherwise planes are going to fall out the sky and important people aren't going to get, close protection, etc., etc. It's absolute madness. But I want to bring up like a couple of points that we made in that video about the government shutdown, as they relate to the economy. Because we pointed out in that video that the Congressional Budget Office and Goldman Sachs, they run some calculations on this, and they reckoned the damage to GDP is about 0.1 to 0.2% for every week that the government is out, and that adds up to a shit ton of money. That is economic activity that is lost. And that's not that can't be made up. That is permanent damage. So it is costing the US government, the US taxpayer, a lot of money that grows by the day for the shutdown to happen. Now that can't be long-term good for the economy. But like as you pointed out, Rob, crypto's flying. Stocks the markets don't seem to care, but. Right. One thing we also pointed out was that credit rating agencies, your Moody's and your Fitches, etc., have started to factor in these government shutdowns, because this is like the 21st. These things only became possible in 1980. And since then, there have been 21 of them, which again in itself is mad. But they also calculate that, you know, these government shutdowns are gradually over time eroding confidence in the US government and in the US government's credit rating. So the more these go on, and I think that was one of the reasons, I think Fitch it was, cited, you know, this and also standoffs related to the debt ceiling, which is another sort of tantrum that the US government likes to have, as reasons why they downgraded US debt a couple of years ago. So, okay, you know, it's not the sort of thing that shows up in the markets. I think, as we pointed out in that video, it doesn't affect, you know, Apple's bottom line or Nvidia's bottom line or Google's bottom line or anything like that. But it does do long-term economic and reputational damage to the US. And, you know, people looking from the outside in, I think it just sows a few extra seeds of doubt around US fiscal responsibility, what have you. And I guess if you want to find a silver lining to it, maybe that economic damage means that the Fed will be more dovish as a result. But yeah, I kind of think the fact that markets don't seem to care or are even pumping off the back of it, I think that masks really the sort of true seriousness of it.
Wow, guy, that was a scary answer. So everybody, if you want to find that video, I'll link it in the description after this. U.S. government shutdown, what it means for the markets. That was riveting. I got to tell you, I didn't think there would be that much. First of all, two things. I didn't think there would be that much damage to GDP by 1 week. And also, I didn't think that the confidence level could erode any further in the American government. But I guess I'm wrong on both counts. So
it's like an altcoin, Rob. There's always further it can go. Well,
that's true. Liberty Financial. So Ben, do you have anything you want to add to that one?
Guy, what did you say? It was 0.1 to 0.2? Is that what it was?
0.1% to 0.2% per week, every week.
Yeah, Rob, if you look at my screen, Atlanta Fed right now is projecting 3.8% real GDP growth in the third quarter of the year. So, the point is like I guess there's some wiggle room, right? Like if like you think about how many weeks it would take to turn that thing negative, it'd have to be a lot, you know. And I actually got really interested and I did this analysis yesterday. I was like, I want to know all prior government shutdowns, right? Like, and let's just forget about who's in office. Just tell me all prior government shutdowns. So I went to this website, history.house.gov, and it shows you, the date that funding ended, the duration of the funding gap, and the date funding was restored. And early on in the 1970s, a lot of sources won't even count those as government shutdowns because they don't really follow the same procedures as they do today, where they furlough a lot of workers. So you could argue that those don't even really count. But in later years, they do follow these procedures, right? So I was like, all right, I exported this, and then I converted these dates into Unix code, into Unix timestamp, so we could, code it in PineScript on TradingView. And what I did was I overlay, so all these little green shaded regions on the chart, these are prior government shutdowns, okay? Right. And this is the S&P 500. So I was like, all right, well, what happened previously? What's really interesting is, first of all, there's not, unfortunately, this is one of those things where there's not an obvious answer. But what you will see is every time the S&P was dropping into a government shutdown, it tended to mark the bottom, right? So here's an example. In 1990, the government shutdown marked the bottom, but it was dumping before the shutdown, right? It was dumping before the shutdown, that marked the bottom. And if you look in 2018, when Trump was in office, into 2018, early 2019, we had a government shutdown, and it also marked the bottom. When the market is going up, there's less, it's not as useful, right? Like honestly, like every single time there's been a government shutdown, you give it enough time, the market's at a new all-time high, right? Regardless. Like there are times where it can, you'll see the market sort of rally into it and get a brief correction, like right here in 1978. And then of course, in a year later in 1979, where it'll like rally into it, get a correction. Everyone's like, oh, it's over. And then we still end up going higher. So all in all, I would say the government shutdowns historically have not had, like the impact that some people thought they would have. And maybe it's because, they tend to not last that long. If you look at the length of time for a lot of these shutdowns, you've got 10 days, 12, 8, 8, 17, 11, 2, 1, 3, 3, 2, 1, 1, 1, 3, 5, 21. Recently, they've started getting longer. And that might be representative of, the, political parties becoming even like more polarized against each other in recent years. Maybe that's the reasoning for it, because in 1996, 21 days, 2013, 16 days. That was when Obama was in office. And then when Trump was in office last term, there was one for 2 days and one for 34 days, right? So, if Guy is right about this whole like 0.1 to 0.2%, which I'm sure, he's taking it from a credible source, it seems reasonable. Like, I don't know what would be sort of a reasonable drop for real GDP. But if it goes on for many, many weeks, I imagine the market might start to care. But again, what normally happens early on in shutdowns is people generally don't care. Like investors, like a lot of times people don't really care. Voters don't really care because they want to get, they're like, oh no, we have the upper hand. Let's like hold out until the other side can't. But then after a few weeks, both political parties, there's like a lot of data I've seen to support the idea that like both political parties end up taking the blame for it, and like neither side is really gaining a whole lot by keeping the shutdown going on. So that's usually why they come to a solution, within a few weeks. So I would guess that they'll probably come to a solution, a resolution within a few weeks, but I don't know. I mean, I also feel like we've seen the government shutdowns trending longer in recent years. So who knows? Hopefully it doesn't go on too long though.
Yeah, hopefully not. But again, like this is for both your points. Like Guy talks about GDP and the economy, and then of course is talking about the markets. The economy is not the markets. The markets aren't the economy. And unfortunately, or fortunately, depending on your view, the markets are doing great. Now the economy, who knows what will happen? But it is interesting that they're predicting that high of GDP, 3.8%. Remember, not too long ago, we were at 3. They revised it at 3.3%. Now we're having growth as far as GDP. Things are looking good. But again, this is actually, if the economy grows, what is Jay Powell going to do and the Federal Reserve? I mean, I'd like them to cut rates, but we'll see. Anyhow, excellent responses. Thank you, gentlemen. I appreciate it. Now let's finish this up and we'll get to Q&A. And we'll just talk about, we're going to talk about AI. And this is from another source that Ben was quoting, Fred. We take a look at job openings, total non-farm. And of course, we can dice this a multitude of different ways. But I just want you to notice that ChatGPT was actually rolled out in roughly October or November of 2022. And of course, we can see that jobs, took a big dump in 2020 because of this thing called the coronavirus. And then we grew jobs like crazy. ChatGPT came. I'm not saying this is the total reason for job numbers going down. I'm just saying that in some places, in some sectors, take a look at Microsoft and some other different areas, you see people losing jobs because of AI. And the question I have for both you guys is this: if AI comes in and we start to get more YouTube players, more virtual YouTubers, what does that do for Coin Bureau and into the cryptoverse? And I will just say, people say, that'll never happen. That'll never happen. I'd like to introduce you to this YouTube channel called Mind to Goals. It has 230,000 subscribers, not that old, but it gets like, well, some are 7,000, 16,000, 215,000 views, 1.3 million views, 159,000. What it looks like is this. It's just a AI generated Elon Musk. And it sounds just like him, looks just like him, and he's in a green screen. And this one has 1.8 million views. So I'm just curious, like as far as AI comes down the pipe, what do you guys think as far as for the channels? Anybody who wants to take this one is welcome to jump right in.
I'll start. There's an interesting chart that's been going around Twitter, so I'll just share it. I mean, I'll just create it on the website here. So
Sure.
you share with that. that chart you showed. So the orange line is job openings.
Yeah.
And the yellow line is the S&P 500. So normally they go with each other, right? This time they didn't. When was Chat GPT launched? The end of 2022. When did they diverge? The end of 2022. So you could argue that, you know, a lot of companies are sort of like running on this whole like AI stuff. I mean, like AI is great. I mean, I use AI. I use AI to create thumbnails. I use AI to generate code. A lot of my developers, you know, for the website, the ITC website, they use the AI to help generate code. Like, I love it. But I mean, you know, you have to imagine that at some point the jaws on this chart will close, whether it means, you know, you could see the S&P fall back in eventually. You could see potentially job openings start to go back up. If maybe AI can lead to new job creation that we haven't even thought of yet, just like the internet led to new jobs. It destroyed a lot of other jobs, but it created new jobs. But yeah, like I think this is why there's like this cycle just feels so weird, and like, you know, like it's hard for people. Like there's not a lot of hiring going on. There's not a lot of job openings. There's also not a lot of layoffs either. And I think one of the reasons you don't have a lot of layoffs is because companies are still doing really well, right? Like they're still making a lot of money. And until revenue really starts to drop, you can argue that layoffs won't actually happen. Back in April, when the markets dropped, I did this video and I was like, look, guys, if we're back at all-time highs within a few weeks, like we were in 1998, because, you know, in 1998, there was like a 20% drop, just like there was this cycle, right? And the problem is that you don't get a recession if stock markets, you don't get a recession if the stock market just goes down and then recovers immediately, like it did back then and like it did over here. You have to have the stock market going down and staying down in order for you to get a recession. So remember, the stock market leads the labor market, right? It leads it. It does not lag it. So it's the stock market going down, which leads to layoffs, which then leads to less demand, which then leads to, you know, more layoffs, right? So it's this like negative feedback loop. We're not in that negative feedback loop right now. We're just in a weak labor market where there's like no job openings. New grads aren't getting hired. But unfortunately for the new grads, they're not the ones contributing the most to the stock market anyways, to their 401ks. That's mostly people who are more established in their careers. And a lot of those people are not getting laid off. As far as for me, I'll continue doing this as long as I can. But I guess the elephant in the room is that, you know, is there an AI version that is much better at a lot of this stuff, you know? And I don't know. Like, I don't know how long that will be. Hopefully I can find a way to make myself useful. Maybe I will go back to nuclear engineering. I don't know. But hopefully I can find a way to make myself useful in that time. But yeah, I mean, it's kind of an interesting thing and somewhat scary. I do think we will have sort of this big. I think at some point over the next, say, like couple of years, we'll see the effects of AI more so on the labor market. But I feel like we're kind of in this weird position right now where we know the effects of it are coming, but until the stock market actually sells off, it's not going to be obvious, right? Because people just aren't going to be laid off. So that's my general thought process. And you know, that's kind of what I think is happening for the broader economy. That's obviously how I think it could, you know, impact my own company as well. But as they say, right, like make hay when the sun shines, and, you know, eventually things will turn, and we'll cross that bridge when we come to it.
Yeah, well said. You know, I'm glad that you got a decent fallback job, electrical engineering. And I will say, I mean, we talked about this a couple of weeks ago, which was
nuclear, not electrical.
Oh, sorry, nuclear. So we can see that OpenAI and the electrical usage for compute right now it's at 0.2 gigawatts, and in 2025, 2 gigawatts, and by 2033 it's going to be 250 gigawatts, which is more than India, Germany, UK, Singapore, and most of those combined. So as far as electrical usage, yeah, I can see it. Guy, what do you think? What does this do for you guys?
It's a good question. You know, Ben, when you were saying, you know, I'm sure there's, you know, I hope there's ways I can think of to be useful. I sort of had a picture in my mind of you talking to like a humanoid robot version of yourself, just being like, I can still be useful. I know about nuclear engineering. I'm a nuclear engineer. I'm pretty good at chess. Like I can contribute.
Yeah,
pretty good at chess.
I'll start to do a chess channel.
Yes, exactly. It'll all be entertainment.
Yeah, the sort of humanoid version of you, sort of making you justify your own existence. It's like, well, I'm still good,
But even then, I still won't be as good as AI. So
yeah, the AI will be like, yeah, I'm pretty good at chess as well, Ben.
Yeah, I'm not too bad. Then he turns the other robots. Can you listen to this guy?
These humans are hilarious, aren't they? They're so quite good at chess.
Yeah, this moron over here. Anyhow,
they used to think. Oh, sorry. Go ahead. I'll talk later.
Yeah, it's a tough question to answer because, yeah, as Ben says, like, how do we know that AI isn't going to open up whole new vistas? Like that's the optimist's view of this. Like on the one hand, shit, AI is going to destroy a whole load of jobs, and you're arguably seeing that. I mean, I think it was Accenture, didn't they announce recently, like they're either laying off 10,000 people or like pausing hiring, because AI has changed everything. I think Klarna, the Swedish payments giant, has basically said, we're not hiring more people now. We're just looking at ways we can optimize with AI. And yeah, it's like probably new jobs will be created, but will that be enough? So that's a big question in itself. And like everyone else, I don't know the answer to that. And we're just going to have to wait and find out and try and adapt as we go along. The question I wonder is, will people, I think people are already getting quite good at recognizing slop. There's a ton of slop out. This is the term, isn't it? The AI slop, just this stuff that is just being cranked out. And I think a lot of people can tell that sort of stuff. And is there going to be a pushback against that? Are people going to crave something authentically human more? And that might sound like cope coming from me, and to a large extent it is, because I sort of think, like, for people like us, where an AI version of us, as Ben says, probably is going to be able to come along and do it a lot better. An AI version of me isn't going to lose the thread of their sentence halfway through and, screw the lighting up in the studio where they're trying to film from, because it looks like he's filming from a shipping container in a car park in Iraq somewhere. It's like an AI version of me will just be much smoother and more efficient and, probably more handsome. And it's like, well, what does that mean for the real me? Is that just me on the scrap heap? So I'm kind of hoping that there is a sort of push for or a desire for people to have more authentically human stuff. But again, the problem there becomes like, well, this stuff is going to get so good, you'll never be able to tell, because the AI me may and less and get the lighting right and all that sort of stuff. But then they'll figure out, it's like, well, the real guy used to stumble over his words half the time and lose the thread of his sentence and couldn't light a room properly. So why don't we just do that? And then no one will know what to believe is real. Maybe I'm an AI now. But yeah, in terms of what this does for us as a company and where we go from here, we are already using AI to an extent. Things like it's very helpful when putting together a video in like finding sources, finding good supplementary materials that we can cut in, all that sort of stuff to illustrate points, sort of turbocharging research in a lot of ways. Our researchers and writers are using it a lot. Of course, you still need to double check because it's, very capable of telling you absolute bullshit from time to time. So you need to be aware of that. But yeah, where it actually goes, I don't know, because I like working with humans. I don't really want to, replace people with AI. I wouldn't think that we all will be hiring many more people. Do you know what I mean? Like, I think probably that's the stage that we've reached now, that it's very unlikely we'll hire many more. Like we might have a couple of positions that we need to fill at some point in the future, but I'd be very surprised if we grew much beyond our current number.
I I can always do your thumbnails for you if you need.
Well, Ben has offered to do the thumbnails. You know, we're negotiating contract terms for that at the moment. Your price is very high, Ben. You're asking. You're asking for
one chess game per week.
That's pretty good.
Yeah, it's I don't know. It's very difficult to know how it'll turn out, and it raises so many questions about just the nature of work as well. Are you guys familiar with the David Graeber book, Bullshit Jobs? Have you come across that before?
No. What's that?
It's really, well, it was written a few years ago. David Graeber's been dead for a few years now, but he wrote Bullshit Jobs maybe 10 or 15 years ago. And I read it quite recently, and it is very, very relevant. And its central thesis was, in the age of the internet, in the times we live in today, a lot of people are essentially employed doing jobs that really do not matter. They don't matter. They don't contribute anything. The people doing them don't really do any work. You know, they go to a lot of meetings, they send a lot of emails, but essentially they don't do anything. The jobs are bullshit. And there are plenty of examples, you know, some of them quite hilarious examples of people doing these jobs that are basically meaningless. And I was talking about it with someone here not so long ago, and they raised a really interesting point, because one of the things that's talked about a lot in the age of AI, you know, that is supposedly coming upon us, is maybe we're going to have to have some form of universal basic income, of UBI. Oof. In order to, if people are going to be, if there are going to be mass layoffs, how do people have any money? And their argument was, it's like, well, maybe with bullshit jobs, we've already been having it. We've already been using a system of UBI in a way, because so many people are so economically redundant that actually companies, corporations, employers in general have sort of been employing a lot of people to do nothing. And that in itself has been a form of income, that if you stripped it away, if you cut every bullshit job, you know, you'd have the kind of mass layoffs that we're now sort of speculating AI might bring. So that's a bit of a tangent, but yeah, I think definitely we've probably reached a peak of how much we can grow, certainly here at Coin Bureau.
I think that's representative. I think that's representative of a lot of companies. Like, a lot of companies are not hiring. So yeah, a lot of times I feel like we always think about like the business cycle, like what's going on everywhere else. Like, nope, like we all represent the business cycle, right? If it's happening in our like, if that's how we think in our company or whatever, then that's probably what's going on in a lot of other companies too. And you can see it on the charts, right? Like, people aren't getting laid off, but people also aren't getting hired either.
Can you imagine if we extrapolate this out and we go into like a recession at some point, or maybe a big, deep recession? And like you said, Ben, you know, once you get into recession, then you start to lay off people, and then the businesses become leaner. And then as time goes on, they're like, okay, now we're picking up the pace. We're over the recession. Looks like we're actually, you know, expanding. Do I need those people back because I'm using AI for whatever else, or I'm using some outsource, or I'm using this? Imagine those days, because right now everybody's still employed because things are going pretty well. But once we hit the bricks, how bad would it be? And I'm just glad everybody's here is investing into assets, because that is the best way to protect yourself in the future. So if you're here investing into Bitcoin or other stuff, congratulations, you're one of the few.
Rob, what do you think the chances are that, just like in 2020, maybe in 2028, we'll just run it all back and send out stimulus checks again?
I can see stimulus. Oh, you know, I just saw there was a piece that talked about how they're going to, because guy was talking about the UBI. They're going to use USDC as some kind of like UBI type of thing for New York in a trial to see how it works out. And it's like, it's being rolled out to like thousands. I didn't verify it, but can I see that happening? Like stimmy checks? Absolutely. Because what are people going to do if they can't find jobs? It's going to take it over. And then what's going to happen? I don't know. I'm just glad I only have my sphere of control. That's why I buy Bitcoin and other stuff. So anyhow, everybody, that takes care of the NFA Live for today. We'll do a little Q&A, and then we'll get out of here. I mean, Guy's been up for 24 hours straight, I think. Ben's got tons of things to do, try to get healthy again. But here's a question. Guy's video on uranium last week was great. I know Ben also likes uranium, but what is the best way to get exposure? So first of all, if you're looking for that video, it's over on Coin Bureau. There's a link in the description for Ben and Guy's channel. it either looks like this or it could have looked like this, whichever way. But that would be a great video to check out. How do we find uranium?
Good question. I was the thing that came up. The interesting thing is, I'll try and keep this short, but there's a difference between exposure to the asset itself, uranium itself, and then exposure to the uranium industry. So what we found that was best, you can get tokenized uranium. It's actually one of the cryptos that I'm watching at the moment. I think it's called XU380. Is it XU380? Yes, XU308, sorry, which is tokenized uranium. I actually tried to buy some recently on KuCoin, and they didn't have the liquidity, so my order just wasn't getting filled. I was only trying to buy a small amount as well. So, but you can get tokenized uranium, but there is an ETF, Global X ETF, which I think has exposure to the asset itself and to miners, and refine it, because you've got to refine it as well, or enrich it. And I think the ticker for that is URA. So I think you can get damn, I tried to buy that at $4.80.
Wow. Not too bad. I think you still got time.
Thanks, KuCoin, and your no liquidity. But URA is the ETF that is most commonly cited, and like I say, that gives you asset exposure, but also miner and industry exposure to uranium.
Got it. Ben, you were big on palladium. Still, where do you buy that?
I mean, I just buy the ETFs. Like, I mean, for uranium, I buy the same one that Guy just said. That's the one I've had for, I think, many years now. Actually, uranium has been one of my best positions this year by far. Like, it's outperformed, I think, a lot of stuff, including gold and silver, I believe.
Nice.
I mean, it's up like, even from April. Like in April, URA was at like $19. Now it's at $49. So yeah, like I've been loving the uranium move. All of them are mostly just ETFs. It's funny because like with Bitcoin, I always like, yeah, not your keys, not your crypto, right? And I think a lot of gold bugs are always like, you have to go buy the physical stuff. But I like when it comes to precious metals, like I just don't want a lot of precious metal. Like I just don't want like stacks of gold and silver just sitting around my house, So
or stacks of uranium for that matter.
Right. I can deal with stacks of Bitcoin. But I don't want stacks of stuff just laying around my house. So I tend to go for the ETFs, though. I understand that there's a lot of people that would be like screaming at the screen for me to say something like that. It'd be similar, for a lot of like OG Bitcoiners if they were to be like, oh, we're just gonna go buy the ETF. Like that would drive other people insane. I'm sure it drives people insane, but I don't really care. Like I'll stick to the ETFs when it comes to commodities.
Yeah, exactly. Yeah, well said. Here's one for you. How do you see the total 3 USDT divided by Bitcoin ratio reaching 0.25 while Bitcoin remains above its bull market support band? And what factors might drive this scenario? This is obviously not a question for me. So, this would probably be Ben. Ben, what do you got for this one?
I mean, I don't know what the narrative will be, but normally alts start dropping like a rock against Bitcoin, in October, going into November of post-election years. So
sounds good.
I couldn't tell you exactly what the narrative is going to be. I mean, if Bitcoin is able to break above 124K and if it does start moving up quickly, usually people just FOMO in, right? Like they just they trade their alts for Bitcoin. I couldn't tell you. I know a lot of people are talking about like the ETFs and whatnot, but when Ethereum's ETF was launched, it didn't do a damn thing to help its price action, right? Like Ethereum didn't start doing well until earlier this year, not when the ETF launched. So I think that the narrative is just simply going to be that Bitcoin represents the best of crypto and everything else is going to bleed. I don't have a great answer other than that.
Yeah, good. That's good enough. And last question, and we'll get out of here. In the bear market, Juan Lolito says, I guess it's best to stay in cash and Bitcoin in case the rally continues. How are you guys going to play this? Are you guys going to stay in Bitcoin and stables, Bitcoin and cash? Or what do you do here?
Definitely not Bitcoin Cash.
Good one. Sorry, we are talking about your alt on this one particular case.
I would generally recommend getting out of altcoins in midterm years.
Me too.
You can hold your Bitcoin if you want. I usually recommend at least holding some of it in case this time is different, right? But yeah, commodities tend to do better. Even the S&P tends to do better than crypto in midterm years. Even though the S&P sometimes goes down in midterm years, it isn't always. Like 2014, the S&P went up. That's all I got.
That sounds good. And then Guy, last one, same thing here. What are you going to do? Cash, stables, S&P 500, treasuries?
Yes, definitely Bitcoin. Definitely some S&P 500. Treasuries, no. I'm not touching debt. I just don't like the way that the direction that's going. Yeah, maybe some tokenized uranium as well.
Sounds good to me. All right, everybody. So that's it for this week. Next week we'll be on Ben's channel, and we'll do NFA Live over there. But that's it for this one.
My channel, I think.
Oh, I messed it up. Let's see. Bro G. Oh,
don't worry, Rob. Don't worry, Rob. It's not like we've been doing this for 4 years or anything.
Hey, I got to remember a lot of things. Answer all these questions and everything. I'm a slow one. All right, everybody. Thanks so much. Go follow Ben and Guy. And that's it for this week. See you guys in the next one. Adios.